for Polo Limited. So we have been told that Polo Limited acquire 90% of the ordinary shares of 10 shilling per value in Solo Limited on 1st November 2021, paying 30 shilling per share. Then the balance on Solo Limited retained reserve at this date was 600 million. On 1st May 2023, Polo Limited acquired 30% of Alo Limited of 10 shilling ordinary shares for 35 shilling per share. Pamoja. Per share. And then the statement. So before when we go to the statement, that information,
I think the purchase consideration.
Yes, that information to help us to get the purchase consideration. So maybe we can get the group structure and also the purchase consideration with such information. So we will draw our group structure. But in exam, nobody wants to know how is your group structure. This is for the purpose of the class I'm showing you. But if in exam, if you know how to take the calculator and calculate and get it, that is the best one. But in class, I'm just drawing. So we have this Polo Limited acquiring Solo Limited and also acquiring another company called Alo Limited. So they acquire Solo Limited on, that is 90% on when? 1st November 2023. And then they acquire this one on 1st May 2023 at 30%. Look at the accounting period. When are we closing our books of account? That 1st October 2023. So we are closing on that 1st October 2023, which means our year began at 1st November 2022. So, and we acquire Solo on 1st November 2023. So, which means is it a full year? When did we acquire this Solo? 1st November 2021. So we acquired this one on 1st November 2021 or 2023. So with this information, we can be able to know is Solo, because the percentage is more than 50%. So which means Solo is a full year subsidiary. Solo is a full year subsidiary. This one, it doesn't matter because we are just controlling 30%. We say it, if you are controlling 30%, unit type gani, is it subsidiary, joint, associate? Ni type gani if you are controlling 30%? Caroline, if you are controlling 30%, this kind of investment, we call it you are forgetting. So we say it, this one is called an associate. This one is called an associate. Associate is not part of the group. So there is no need to see even associate was acquired on when and when, because it is not part of the group. We will not consolidate the statement of the associate. We will not consolidate the statement of associate. So it is not part of the group. So now, from having now drawn this structure, now we can get we have the percentage, then we can get the number of what? let's calculate that purchase consideration, because that information is helping us to get the purchase consideration. We will follow the same format like we did with our first question. So we have been told that 90% of ordinary shares of Solo Limited with a par value of 10 shilling. So what is the total ordinary shares of Solo Limited? Go to the balance sheet. Ordinary share capital in bracket 10 each. We have been given the total number of ordinary shares as a value 14,400. So we will take S, the number of ordinary shares is 14,400, divide by the par value, which is 10. So if we divide by the par value, we'll be able to get 1440 number of shares. These are shares. But are we controlling all the number of shares in this company? No, we are just controlling 90%. So you multiply by 90%. How much will it be? 90% of that, 1440 multiplied by 90%. This is 1296. So let's get the value of ordinary shares, the value of ordinary share capital, the value of ordinary share capital. I will take the number of shares, multiply by the par value, which is 10, to give me 12,960. That is the value of ordinary share capital. That is the value of ordinary share capital. Then they are selling at what price in the market? Remember the par value. If you have done financial management, you will say par value is the original price. Now they are selling at 30 bob in the market. So that extra 20 shilling, we call it the share premium. So we have the share premium, value of share premium, which is 30 minus 10 multiplied by the number of shares, which is 1296, to give us 1296 multiplied by 20 to give us 25,920. So add the 2 plus 12,960. So the total giving us 38,880. So that is the total purchase consideration. That is the total purchase consideration. Kuna mwenye mpaka hapo anachanganyikiwa akipewa purchase consideration in form of shares. So this examiner was a good examiner. Hajatuambia 3 shares of this or 4 shares of that. I think that is another information which you need to understand. In this case, we have not been given the proportion of the shares, but tukipewa proportion, rudi back kwa ile swali tulifanya hizo mbili, siko na proportion, uangalie hiyo proportion ya shares inaendaje, but hii haina proportion, so you take it the way it is. So now we proceed. We have the balance sheet there, which we don't have to read all of them. We go to the additional information number 1. The following details relate to the revenue reserve were as follows. We have the revenue reserve as at 1st November 2022 for Polo, Solo and Alo. We have the retained earnings for that. And then number 2. So if you read any information, you should know hii information inanisaidia wapi. That one, it will help us to get the goodwill. Those information will help us to get the goodwill, the first one. And then number 2, we have been told it is the group policy to value non-current interest, non-controlling interest at the acquisition date at a fair value. The fair value of non-controlling interest on 1st November 2021 was 3,600 million. So if you have been given the fair value, what's that one is telling us, the examiner is trying to tell us which method of goodwill are we going to use. The full method. Remember full method tulisema the value of the parent and or the value of NCI is added to the value of the goodwill of that subsidiary company. That's why tumepewa non-controlling interest. So we are going to use the full The full method. And then number 2. A check of 480 million from Solo Limited to Polo Limited was not received until 31st date 3 November 2023. Intercompany balances are included in the account receivable and payable as appropriate. So who can tell us that transaction? Mary, can you help us to interpret that transaction? How do we treat that transaction? And what is it? Because at this point lazima ukisoma swali each and every statement ujue hii statement ina affect wapi na nini. So Mary, hiyo statement hiyo ni statement gani? Ama ni transaction gani? Kogi, that not number 3. It is what account, or it is which transaction and how it will affect this group account. Bryant, can you help us? So ingekuwa exam hakuna mwenye angefanya hiyo adjustment ya number 3. Edwin, what did we say about the intercompany transaction? We say the intercompany transactions will be eliminated in full. But this one is not the intercompany owings. Remember we said we have the intercompany owings which affect the receivable and it affects the payable. But this one, the subsidiary company has paid the parent company, but the parent company has not yet received this cash. So that one we classified as the cash in transit. Tuliandika cash in transit kwa notes zetu. If you go back to your notes, we wrote something about the cash in transit. How do you account for the cash in transit? So the cash in transit, it only affects the parent company. It only affects the parent company in what account? You are paid your debt. So what will happen? You have already adjusted your account payable. But the person receiving has not yet adjusted his account receivable and the bank balance. So what will happen? You will debit the bank, we credit account receivable so that we can account for that transaction. Hiyo tu ndio nilikuwa naitaka kwenu, sio vitu nyingi. And then number 4. In October 2023, PO Limited sold goods to allow for that, and these were transferred at the markup of 30% on the cost. 2/3 of this good was still in the inventory as a law. That one. So that one inatusaidia kufanya nini? Inatusaidia kufanya nini hiyo? So each and every information it helps us. So that one it helps us to get the unrealized profit. It is now the question, are you able to get the unrealized profit? And then number 5, just prior to its acquisition, Solo Limited was successfully in applying for the 6 years license to dispose of a waste of a product. The license was granted by the county government at no cost. However, the Solo Limited estimated that the license was worth 2160 million at the date of acquisition. So that one also, it is part of the share of net asset at the date of acquisition. Then number 6, on 1st November 2021, Solo Limited owned an investment that at a fair value of 1440 millions, excess of its book value, and the value of this property has not yet changed since the acquisition. So this means also it is part of the shares net share of asset at the disposal or at the acquisition date. So the examiner needs you to get the computation of goodwill on each investment, which is this investment, the subsidiary and the associate. That is 4 marks. So we can't have that one. Goodwill. How do you get the goodwill? We say goodwill is the difference between what? The purchase consideration and the net assets. The purchase consideration and the net assets. So we'll take the purchase consideration, which already we have gotten there. So our purchase consideration is 38,880. That is for, this is for subsidiary company. Let's get for the associate. That is for subsidiary company. For associate, I will take the total number of shares, which is 7,200, divide by 10 per value to get 720. Take the percentage of control, which is 30%. Take the percentage of control, which is 30%. So 30% of 720 are going to get, we're getting 216. So get the value of ordinary shares and also get the value of share premium. So the value of ordinary shares will be 216 multiplied by 10 to give us 2160. Now, the original price is 10 shilling per value. Now we are selling at 35 shilling per share. That difference is what we call the share premium. So we have the share premium of 35 minus 10 multiplied by 216. So that 5 minus 10 multiplied by 216 to give us 5400. So add the 2 plus 2160. So I'm getting 7560. So that is the purchase consideration of this is of NCI, which is a law. So the purchase consideration of that is 7560. So I hope we are on the same page. Na mtu tumeacha nyuma. So kama tumekuacha nyuma, you ask tupunguze speed. So I now have the purchase consideration of the two companies, and then so what we need, we said if the examiner has given you the value of NCI, then to use the full method. So I will put the value of NCI here. So the value of NCI, we have been given that 6,600, and then say less share of net asset, which you will start with the ordinary shares. How much is the ordinary shares we have there? 14,400 in the balance sheet. We need pre-acquisition retained earning. At the date of acquisition, what was our retained earning? If you go back to the first note, we have been told Polo Limited acquired 90% of the ordinary shares of 10 shilling per value in Solo Limited on 1st November 2021, paying 30 shilling per share. The balance on Solo Limited's retained reserved at this date was 9,600 million. That is our retained earning at the date of acquisition. So this examiner alikuwa mzuri, hakutaka ucompute, so amesha kupea the retained earning at the date of acquisition. So you come and put that value here. What else? Put the value of, since there was the fair value of the disposed asset, note number 5. So we have the fair value of waste product or the waste asset. We have been given 2160. We also have the fair value of the investment, note number The last note, we have been given the fair value of the investment of 1440. So total this, total that. Hii ingine tuko na ordinary shares. You just pick there. We have 7200. What about the retained earning? Pre-acquisition retained earning. Pre-acquisition retained earning for that. Wali acquire when for the associate. Look at the associate. The associate was acquired. They acquired associate on 1st May 2023. So what was the retained earning at the date of acquisition? So we draw this line. This line will help you. We acquired on 1st May.
Mwalimu, excuse.
Yes.
Uko bio bwana, hata mimi na drag tu nyuma na kufuata tu polepole nikiandika notes. We.
Niko very fast.
You're too fast.
So umeandika mpaka wapi?
Alafu mwalimu, mimi hata sijaandika anything. Nini iko kamera iko blurry.
Okay. So another issue.
I have a question, mwalimu.
Yes.
We computed consideration of the date. Where will it be applicable now? Because we only capture the NCI and the purchase consideration of the parent company.
This one is because you have been told to get the goodwill of the each investment. So remember, it is applicable. So there is where we will put that amount. Remember, when it comes to the associate, we don't consolidate everything. We only consolidate the investment. And if the camera is blurry, then also you need to check your network. Maybe the network. So Jacob umeandika yote. So let's write mali welewi.
Hiyo point number 3 and 4, what are those? After the pre-acquisition retained earnings, what are now the point number 3 and 4?
Number 3 and 4. Number 3 and 4, remember tulisema hiyo ukipewa there is a transaction between the parent and the subsidiary company. So they are selling goods to the parent and the parent also selling goods to the subsidiary. That is the intercompany transaction. So that point only it will help us to get unrealized profit, UPI.
No.
That is not number 3, not number 4. Not number 3.
I mean,
yes.
This is what I mean. In our computation of the goodwill,
yes.
This point number after pre-acquisition retained earnings on your workings. That one that has a value of 2160 and 1440. I'm not seeing it very well from my end.
This one we have been given. Look at notes number 5 and 6. So there is no working. We are just copying what we have been given, because we have been given the fair value of the asset at the date of acquisition, and also the fair value of the investment at the date of acquisition, which they had to dispose after acquisition or before that acquisition. It also affects the value of the goodwill. Any question? So just write, ukishaandika, we proceed. So I hope you have written. So let's have now the goodwill of not the goodwill, but the pre-acquisition retained earning of an associate So if you look at this, the financial year end 31st October 2023. This associate was acquired on 1st of May 2023. So we need to get the retained earning at this point. We need to get the retained earning at this point. So how will we get the retained earning at this point? First, we need to get the total revenue for the whole year, and then now we apportion based on the number of months. So the total revenue for the whole year for this associate is how much? We have been given to the total revenue for the year, which is 7,200. If you look at there, we have been given at the beginning ilikuwa 9,600. Now at the end we have been given 16,800. If you look at here, we have 7,200. That is for the year. This is for the entire 12 months. This is for the entire 12 months. This is for the entire 12 months. Now, how many months from 1st November 2022 to the 1st May 2023? Jacob, how many months? Yes? Uko na November, you have December, that is 2 months. And then from 1st January to the 31st April, that is 4 months. So 4 months plus 2 months, that is 6 months. So from here to this point is 6 months. So from this point to this point is 6 months. So if we have 6 months, we can apportion the whole profit of 7,200. So you take 7,000. Itaandikia wapi? I hope you have written the workings there. So you take 7,200 multiply by 6 over 12. Hii itakuja ngapi by 1? This one is 6.